Hello and welcome to World Business. Now let's take a look at the stories shaping the global economy this week, from market movements and major corporate developments to the trends influencing trade, investment and growth across key regions. Here's what you need to know.
Members of my cabinet.
The US will impose tariffs of 50% on any and all goods imported to the country from any nation supplying military weapons to Iran, US President Donald Trump said on Wednesday. In a Truth Social post, the US President wrote that any country found to be supplying Iran with weapons would be subject to the levy immediately, with no exclusions or exemptions. It came as Trump said the US would work closely with Iranian authorities following the ceasefire agreement announced on Tuesday and what Trump called very productive regime change. Trump said in a separate post that there will be no enrichment of uranium and that the US and Iran will discuss tariffs and sanctions relief.
US stock futures jumped Wednesday after US President Donald Trump said he was suspending Iran attacks for 2 weeks, just ahead of his 8 p.m. Eastern Time deadline, pausing a 5-week conflict that closed a crucial waterway for global energy supply and sent equity prices reeling. Futures tied to the Dow Jones Industrial Average rose by 1,229 points, or 2.6%, by 6:47 a.m. Eastern Time. S&P 500 futures added 2.7% and Nasdaq 100 futures climbed 3.5%. West Texas Intermediate crude futures tumbled more than 16% to $94.4 a barrel following Trump's declaration, while international benchmark Brent for June delivery lost more than 14% to $93.6 per barrel. Trump said the 2-week ceasefire was subject to Iran agreeing to a complete, immediate and safe opening of the Strait of Hormuz. The US has received a 10-point proposal from Iran that is a workable basis for negotiations, he said. Iran's Supreme National Security Council has agreed to reopen the waterway for 2 weeks, as long as all attacks are halted, according to a statement from Iran's foreign minister. The statement said transit would need to be coordinated with Iran's armed forces.
European shares jumped more than 3% on Wednesday as a 2-week Middle East ceasefire sparked a relief rally across global markets, raising hopes that oil and gas flows through the Strait of Hormuz could soon resume. The Pan-European Stoxx 600 index was up 3.6% at 611 points as of 8:34 a.m. Greenwich Mean Time. Regional markets also mirrored the move, with Germany's DAX up 4.7%, while London's FTSE 100 climbed 2.5%. Europe's fear gauge, the Stoxx Volatility Index, fell below 25 for the first time in 3 weeks. The gains on Wednesday were broad-based, with travel, industrials and banking advancing between 6% and 7%. They are typically seen as prime beneficiaries of lower energy costs and falling bond yields.
Asian markets rallied on Wednesday as the US-Iran ceasefire agreement drove crude oil prices sharply lower, eased concerns of an economic slowdown, and lifted investors' appetite for risk. In Japan, the Nikkei 225 index rose 5.3% to 56,308 points, climbing for a 4th straight day to hit its highest close since March 2nd. The yield on the benchmark Japanese government bond fell 4 basis points after hitting a 27-year high on Tuesday. South Korean shares rose nearly 7% on Wednesday to close at the highest level since mid-March, as the 2-week US-Iran ceasefire sparked a relief rally. The benchmark Kospi closed up 6.8% at 5,872 points. In Hong Kong, the benchmark Hang Seng Index finished at 25,893 points, gaining 3%.
SK Hynix shares surged on Wednesday. Investors bought in after its fellow South Korean chipmaker Samsung forecast a big quarterly earnings jump. It led markets to question whether SK Hynix might be on course for something similar. Samsung on Tuesday projected its first-quarter operating profit would rise more than 8-fold. That was well ahead of analyst estimates. Samsung found demand for AI infrastructure stretched supply and drove chip prices higher. Korea Investment and Securities on Wednesday raised its estimate for SK Hynix's full-year operating profit. It now sees a 28% climb to just over $146.5 billion, more than quadruple last year's numbers. That was due to stronger than expected price increases of both DRAM and NAND chips. SK Hynix shares traded up 15% each at one point, which outperformed Samsung's more than 8% gain. SK Hynix is due to report January to March earnings later this month.
Delta Airlines on Wednesday forecast lower than expected profit for the second quarter and said it was too early to update its full-year outlook, citing uncertainty from a surge in jet fuel prices driven by the Iran war. The Atlanta-based airline said it was removing all planned capacity growth from the June quarter, which would cut supply by about 3.5 percentage points from its original plan. Delta added its capacity growth plans now have a downward bias until the fuel environment improves. The US carrier's forecast highlights the growing strain fuel costs are placing on airlines after the Middle East conflict sent shockwaves through energy markets. Since late February, jet fuel prices have nearly doubled, marking the industry's first major post-pandemic stress test by inflating costs, disrupting schedules, and pushing the limits of what travelers will pay. However, there were some signs of relief on Tuesday after US President Donald Trump said a 2-week ceasefire agreement had been reached with Iran. Delta shares extended gains to rise about 12% in pre-market trading after the airline reported stronger than expected first quarter profit. Shares of rival carriers also rose before the bell. United Airlines was up 14%, American Airlines added 12%, and Southwest Airlines gained 11%.
Oil prices rose on Thursday. Markets were concerned about whether a 2-week Middle East ceasefire will hold up and were unsure about energy flows through the Strait of Hormuz. Brent crude futures were up around 3% at roughly $98 a barrel, while US West Texas Intermediate crude also rose by a similar amount to just under $98 a barrel. Both benchmarks fell below $100 per barrel in the previous trading session. That was on optimism the US-Iranian ceasefire would result in the Strait's reopening. But analysts still saw geopolitical risk, and there was no clarity on what US-Iran talks would mean for oil flows. The Strait of Hormuz connects supply from Gulf producers to global markets, and it usually carries about a fifth of global oil and gas supply. Shippers on Wednesday said they needed clarity on terms of the ceasefire before they continued transiting through the Strait of Hormuz. Iranian media reported the country has issued maps to guide ships around mines and show safe paths for passage. Regional oil facilities also stayed under threat. An oil industry source said Iran struck sites in nearby countries after the ceasefire. It included a pipeline in Saudi Arabia, which has been used to bypass the Strait of Hormuz. Shell gave an early sign of the effects the US-Israeli war on Iran could have on oil major earnings. The energy giant cut its first quarter gas production outlook on Wednesday, but it also signalled a surge in oil trading profit and a hit to short-term liquidity. Global benchmark Brent crude oil prices jumped in the first quarter to multi-year highs near $120 per barrel. It rose after strikes on Iran in late February led to the country shutting the Strait of Hormuz and attacking Gulf neighbours. Shell's working capital is a measure of short-term liquidity and expected to swing to between -$10 billion and -$15 billion. It said this reflects unprecedented commodity price volatility hitting inventory. The British firm expects working capital moves to reverse over time if oil and gas prices fall. Shell said trading results in its chemicals and products business, which includes Shell's oil trading desk, could also prove eye-catching. They are expected to be, quote, significantly higher than in the previous quarter. Shell's first quarter integrated gas production was expected to be about 880,000 to 920,000 barrels of oil equivalent per day. It previously expected 920,000 to 980,000. Shell also forecast adjusted earnings for its renewables and energy solutions units be around $200 million to $700 million. That's well up from $131 million in the fourth quarter. Shares were down more than 5% after the update.
US President Donald Trump's two-week ceasefire with Iran is unlikely to bring quick relief to the aviation industry, according to industry executives on Wednesday. That's even as airline shares surged on hopes the deal could ease the worst crisis carriers have faced in years. Industry officials warned that jet fuel supplies will remain tight and costly for months after damage to refining capacity across the Middle East. Delta Airlines on Wednesday forecast lower than expected profit for the second quarter and said it would cut capacity to try to offset about $2 billion in extra fuel costs it expects to book. Fuel, typically airlines' second largest cost after labour, accounts for about 27% of operating expenses. Jet fuel prices have more than doubled since the conflict erupted. It far outpaced a roughly 50% rise in crude prices before the ceasefire. Iran's closure of the Strait of Hormuz choked global fuel supplies, forcing airlines to hike fares, cut flights, add refuelling stops and carry extra fuel. Safety concerns have seen carriers cancel services to and from the Gulf. Oil fell below $100 per barrel after Trump said he had agreed to a two-week ceasefire with Iran, subject to the strait's immediate and safe reopening. Despite the turmoil, airline and travel stocks rallied on expectations the ceasefire could mark a turning point. Tourism, however, also faces a long recovery. TUI said two of its cruise ships stranded in Abu Dhabi and Doha since the conflict began would take at least 4 weeks to return to service once conditions allow.
This is Zhangmutou, also known as China's Plastic City. Located east of Guangzhou, China's largest plastic trading hub has been feeling the sting of rising oil-linked costs driven by the Iran war. Plastic prices have risen sharply, squeezing margins, disrupting logistics and fueling panic buying across the supply chain. Peng Xin, the general manager of a firm that manufactures plastic pellets, says costs have surged by about 60% since March. He also says his factory's safety stocks have been depleted with new raw materials being bought at elevated market prices, costs that he says would soon trickle down to customers. Zheng Bin, marketing manager at an online trading and pricing platform for plastic raw materials, said firms have been stocking up in preparation for a longer-lasting Iran war.
With the Middle East situation unlikely to ease in the next 1 or 2 months, panic has driven people to actively stock up. Upstream petrochemical plants without crude oil and feedstock to produce with have also been forced to raise their prices.
The rush to secure supplies has also clogged warehouses and roads. Warehouse owner Han Bing says this year is the busiest year he's ever seen, with daily turnover doubling to about 1,000 tons from around 500 tons previously.
At the peak, after March 5, Zhangmutou was gridlocked for nearly a week. Traffic jams stretched about 6 to 9 miles. Every warehouse was packed to capacity, and both inbound and outbound cargo were heavily affected.
China is the world's largest plastic producer, consumer and exporter of final plastic products, according to a 2025 report by the Organization for Economic Cooperation and Development.
Fast retailing saw a near 30% jump in profit during the second quarter. The Japanese firm said on Thursday it rose to $1.19 billion in the 3 months through February. That was well up from a year before and easily beat analyst expectations. The Uniqlo owner also raised its full-year forecast on strong international growth to around $4.4 billion. It's up from a previous projection of $4 billion and puts the retailer on track for a 5th consecutive year of record earnings. Fast retailing's second quarter ended just before the start of the US-Israeli airstrikes on Iran. The conflict has sent oil prices soaring and hurt supply chains. Markets now face uncertainty over the possibility of a permanent peace deal. Investors will look at how the Iran crisis may impact costs for Uniqlo. One example could be how many of the brand's products are made with polyester. A Japan-based supplier to the company said on Tuesday it would raise prices on polyester fibre by a 1/5 due to higher oil prices. Europe's retailers have also warned a drawn-out Middle East conflict could drive prices higher and lower consumer demand.
TikTok will build a second billion-dollar data center in Finland in less than a year. That's according to Chinese parent ByteDance Wednesday. The firm is moving data storage for European users to the continent, as nations there ramp up laws around data sovereignty and user protection. Policymakers have pushed social media platforms to protect children from addictive algorithms. TikTok said it was making a $1.16 billion investment in a data center in Lahti, a city in southern Finland. The company told Reuters it's part of a $14 billion European data sovereignty initiative, which, it said, will deliver industry-leading protections for the data of over 200 million European users. TikTok said its European user data is currently stored with enhanced safeguards across 3 data centers in Norway, Ireland and the US. But increasingly, Finland has become an attractive location for data centers due to low costs, low carbon energy and cool climate. TikTok's first finished data center in Kouvola is to be operational by the end of this year, with the second one up by 2027.
Well, that is all for this edition of World Business. You can stay across the very latest business headlines and analysis right here on A News and across all our social media platforms and, of course, our website. Thanks for watching.